Okay, good. All right, so our first interview today, we have Dan Gallagher, Chief Legal Officer at Robinhood. He's had extensive background in financial markets and regulatory matters, including as an SEC commissioner from 2011 to 2015, and as chair of the Securities Department at the international law firm WilmerHale. We have Steve Quirk also here, Chief Brokerage Officer at Robinhood. He brings significant experience in educating the next generation of investors, including championing the creation of TD Ameritrade University program during his time at the firm. And moderating today's discussion is Jamie Selway, a partner at Sophron Advisors. I'll turn over to you, Jamie. Thank you very much.
Thanks, Jimmy. Thanks, STA. It's great to see another fully filled room, another outstanding conference in this environment. It's fantastic. I'm pleased I don't have to introduce these folks. I will say, I had to append to Dan's bio. Notwithstanding all of that, he remains sort of a strident friend of free markets in Washington. Thanks to Robinhood for sponsoring the conference as well. So we got a lot to cover. We want to touch on business conditions. We want to talk a little bit about regulatory policy, Washington. So Steve, why don't we start with you? Obviously, different market in 2022 than when we were here last year, 2021. How are the Robinhooders doing? Any changes in behavior that you've seen this year relative to last?
Yeah, so this question comes up a lot, has been coming up a lot. We've been talking with elected officials, regulators, and people in the media, and that's a question it's a common question because if you know Robinhood, it's about 23 million clients, but 50% of them are first-time brokerage clients. So this is obviously new to them. Their average age is just over 30. It's a challenge, for them because they haven't seen market conditions like this before. So we do a lot in the way of trying, obviously they're self-directed, but we do a lot in the way of trying to help them understand historical things. Like, for example, we sent out an email about a month ago and just pointed out that if you looked at the returns of the S&P over the last 20 years, it's right around 9%. If you miss the 10 best days, it's about 5%. If you miss the 20 best days, it's about 2%. If you miss the 30 best days, it's 0. Which is just, a gentle reminder to them that if they stay the course and continue to do what they do from an investment standpoint, these things too shall pass because they're young. I sort of have a proxy for it. I have 3 daughters that are in their early 20s. And for anybody who has daughters, this is going to resonate with you, or kids. For some reason, they think I control the market. So, as soon as we have a down day, I get the text, not a call, a text, with a snapshot of the portfolio, WTF, ... Like, yeah, I decided the market's been up long enough, so now it's going to go down for a while. And your mom's going to make it rain tomorrow, too.
Just respond in emojis.
Exactly. So what I tell them is the same thing that we tell our clients is, listen, you want to remove the emotion of it? You can do reoccurring investments on a weekly, monthly, annual basis and just continue to do it. And I can never use the word, especially with Dan right next to me, guarantee in this business, but I can assure you in 20 years, you're going to thank me if you continue to just do what you should do and invest in that method.
So real quick, data points. How many users on the platform currently? What percentage first time investing? And then you touched on age, median age.
Yeah.
If you know those.
Yeah, the median age is 31. There's average monthly users about 14 million. Yeah. Recurring investments, I think it's like 40%.
40%.
Yeah.
So a lot of people
which is good, and it's small. They're small. They're small investors, smaller accounts, and so they, again, this is challenging for them, but they're navigating quite well. We actually, if I can talk about them in aggregate, we created an index because we absolutely detest this stupid narrative that exists that the retail client buys at the top and sells at the bottom, and we can see that's not the case. So essentially what we do is we look at the top 100 instruments that our clients are holding, and then we overlay that on the NASDAQ because they are more inclined to have stocks that look like NASDAQ stocks. And if we go back to 2020, they're actually outperforming. And that's good news, because they're going to underperform, they're going to outperform, but in aggregate, they're holding up pretty well.
So a big focus of Robinhood generally, and a big focus of you personally
Yeah.
in your career has been investor education.
Yeah.
So how has that changed this year?
Yeah.
And give us some recent examples.
It's something we're continually working on because you can never do enough. And, again, you can't force people to digest your education, but they want it. They just want it in their format. So it's changed so much over the years because I started my career in education a very long time ago. It used to be long form education. People were fine with that. We used to be able to get more people than this to come in a room on a Saturday and listen to us talk. Me and JJ Kinahan. Can you imagine that? I could think of better things to do on a Saturday. But anyway, now it's come.
Or Wednesday.
Or Wednesday. Any day.
Any day. Yeah.
Now we've gotten to the point where they want it in short form, on demand, whenever they want, and they want it in context. So in other words, if I'm trying to do something within the app, we'll just try and have it there in the pathway so that they can digest it really quickly and help with their decision making. And we have our Snacks newsletter. It's got 40 million subscribers, so we get a lot of information out there for people to digest.
So speaking of education and help, the commission began a comprehensive review of retail last year, and one of the items was a proposal on digital engagement practices. So Dan, what became of that? Have we heard anything? We talked about it on the stage last year.
Yeah, well, good to be back. Good to see all the familiar faces here, and I can't actually see you because of the Klieg lights in our eyes. It's my eyes are watering here. Yeah, it's digital engagement practices, gamification, whatever you're going to call it. We've heard rumors that Gensler's going to drop some proposal in the next couple months. I don't know if you looked at the comment file on their concept release. We put in, I think, a pretty excellent comment letter explaining to the commission that, at least at Robinhood, we don't do 95% of what they laid out. So there's this mythology about what's happening in app-based brokerage, at least vis-a-vis Robinhood, that's just incorrect. So I think we set that narrative straight. And then we kind of reminded them also, too, that there's an Administrative Procedures Act, a lack of statutory authority, and a First Amendment violation if they want to go forward with that. So have fun with that one, SEC. This is, again, the problem with it is, what's the reason? What's the problem you're trying to solve, right? You have to have a market failure. You have to have something that you're trying to fix before you regulate.
It helps.
Well, you should, right? That's good government. And this is yet another solution chasing a problem. This is all coming out of GME, GameStop, early, January 28th stuff, and it makes no sense. So we'll see what comes out. We'll deal with it. But there's this perception that firms like Robinhood try to manipulate young minds, mine your data and feed you recommendations. And I had a conversation with a very senior person at the SEC about this and said, okay, so is the rule, I'm just trying to picture with this rule. I used to write rules there and work with the rule writing staff. Is the rule going to say your user interface needs to look like 1999 E-Trade? Right? Like you have to go find DSL again, dial up, listen to that chirp, and then if you do that, then you're fine, right? Yeah, get a modem. That's great. That's good government. Let's send us back 25 years.
It is, first of all, to even have the notion that we would want our customers not to do well is pretty strange, because you're not going to, look, if you have a brokerage customer, you want a long, healthy relationship with them. You want them to be successful, because if people are successful at a brokerage firm, they're not going to be like, you know what, I'm doing so well, I'm going to switch and go to a different broker. It doesn't happen, right? So the idea that we would want to incent people to churn is really foolish. No broker.
But that's the theory, though, right? This is the theory, is that if you stay on the app longer, you'll trade more. If you trade more, you lose more. Let's cite a 1996 Dutch study when commissions were $100 to support. That's what they're doing.
So it sounds like we expect something, don't know what it is.
Right.
But so I guess I was going to ask, we've had a great experiment on the impact of gamification and manipulation we've had incredibly changed market conditions. It sounds like your investors have changed behaviors. So it sounds like it's not so much the features and functions of the platform, but rather market conditions that change the way your clients behave. Is that
I mean,
fair?
the market can look across the industry. You've seen people curl up, and they probably curl up a little bit more at Robinhood because they're younger and they haven't been through this before. If I'm a person who's been in the market for years, we've seen this before, so they're probably a little better equipped to navigate it. At least they're more comfortable to navigate it. But that's really been the change, and I don't attribute it to anything that is happening in the app one way or another.
And FINRA is doing a review too. I would say, I don't know what's going to come of that. It's been a little more thoughtful than what's happening at the SEC.
I would say some of the things though that are in there, and we don't even have this, but the questioning of whether paper money, so in other words, I can practice, is encouraging people. I'm like, I'm sorry, that's really stupid. That's like saying you can't have training wheels on a bike. You just got to get on the thing. Like, why would he ever do that? Yeah. Like, if somebody can practice without putting money to work and become more competent as an investor, why is that something that we're concerned with? I just don't understand.
Every time Steve says stupid, you're
expression.
supposed to take a drink of coffee.
Yeah.
Just so you know, we forgot to lay out the rules of the game before.
Mosa.
So to stay on the SEC for a moment, Chair Gensler gave a speech in June at our friend Richard Petto's conference. He unfurled a number of ideas. One of the most tactical was the notion of getting odd lots on the public market data feeds, which is interesting because that stands in contrast to really not doing much after a major court victory to really revise the governance and the content of the feed. So threshold question, Dan, do Robinhood clients care about market data?
No, I mean, I would say no. Q's closer to it,
Yeah.
but I mean, they like the market data we provide. I think they have no concept of what we pay or how fees are passed along through the chain.
So somewhat, and then so too, what do you make of just market data policy right now? It feels a little.
Well, I mean, I was a fan, quite frankly, of the Clayton-Redfern rule. I was happy it was upheld. I think the commission and the trading and market staff have a really tough challenge, which is how do we take this decision of the DC Circuit, take Chair Gensler's speech, put it all together in one pot and cook it, right? Mm-hmm. Because there's a sequencing issue, there's really complicated cost-benefit issues here, because when you do a cost-benefit analysis, which is required by the APA, the DC Circuit has reminded the SEC multiple times, you have to look at a baseline. What's the current baseline? Well, the baseline is going to change if you implement the rules that the DC Circuit upheld. But that's not what they're talking about. I talked to Director Zhu about it, and you guys can ask him later. I don't understand how this is going to be sequenced in a way where you can do a proper cost-benefit analysis. Because if you're going to shift the baseline, you can't throw rules on top of the old baseline. So we'll see how it rolls out.
Possibly back to the drawing board?
It should be, but that's not what's going to happen.
So another idea floated, another trial balloon, was the notion of auctions. Steve, you've got substantial experience in the options world.
Yeah.
The idea is pretty common there. Bit of a head scratcher, retail auctions in the equity world. If something like that existed, mm-hmm. How would Robinhood contextualize it in best decks? Do you think it'd be beneficial?
We've been public with this and have talked with the Trading and Markets and the SEC on this. We understand kind of the logic, but what I think is being missed is there will be fierce competition for a subset of orders and names. However, and we've actually modeled it, I think over 50% of our current volume, we don't think there will be very robust competition, or maybe no participants in some instances participating in that auction. And when we talk to the regulators about this, and anybody who will listen, we explain, we collectively, everybody in this room has made it an amazing experience for retail clients today. Amazing experience. And when you change that, it's us, right? They don't understand the ecosystem. They don't understand a lot of this. Frankly, they don't care, right? As long as what they see on the tape is where they get filled or better, that's cool. If that experience changes dramatically, which it will, we're going to hear about it, and everybody's going to hear about it, and that's a huge negative. And then you get to an environment where you're starting to create mistrust, You know, I think my friend Ovi, if he's in here, he's probably not. He was out late last night. I'm calling him out. He's probably not in here. As he says, it's going to be like a Black Friday sale, right? You see a price, but you know there's only one person that can get that price, right? So you don't want to end up in a scenario where you have all kinds of confusion around what's happening. And I actually think, from what I've heard, there's an acknowledgement that they know that that's going to be the case, but they're okay with it because in aggregate, they think it'll be more beneficial. I'm skeptical of that.
Can I just jump in? I've been thinking about this.
Yeah.
We had a meeting with SEC folks yesterday. They want a CLOB. They want a government-run CLOB, and they just aren't saying it.
This is a strange way to do that.
It is, but if you just break down every little slice, all these 6 proposals from the Sandler speech and everything else, it's like you want the government to run this, and you don't really care if retail gets a good execution. That's what you're saying, because they're getting good ones today. You want to shake it up. You think the spread is owned by retail investors. It's not. It's owned by those who commit capital and work for it, right? But this is where we've moved to. The spread is now owned by retail in the mind of the SEC. Therefore, the SEC can regulate how much of it goes to a market maker. Does any of it go to a retail brokerage, or do we have to charge a commission, which will be called, by the way, the SEC commission? That's what we're going to put on 10b-10.
32A fees?
Courtesy of, and we'll put the pictures of the commissioners up there on the confirm. These
And a phone number.
These guys decided you should pay $5 or $10 to send them your regards. So, but and then remember, pre-NMS, Jamie, you know this. They wanted a CLOB, right? And then it turned into NMS. And people forget that sordid chapter in market structure history. But you get at it, you're like, what is the government price setting here, directing where trades can go, right? It is.
So is your sense that, I mean, it sounds like this proposal, we don't know much about it. Like they're still maybe noodling, but it sounds like there's a sense that you have that they could be towards one auction, and therefore it forces the consolidation down that path.
I'm of course,
yeah,
being a little sensational, which I tend to do. But
it's okay.
I think it helps
Jim likes that.
to train your thought, right? Because it's like, what's the difference between a CLOB? You want a government-run utility or utilities, right, that are running auctions per SEC rules without regard for what the end retail investor likes and appreciates and cares about.
To Steve's point, right, to Hobson's choice, a monopolist auction would work better as an auction. That may be better than a gazillion auctions and no visibility. But the broader point is that this seems a little unsound.
And that's a utility.
Well, think about it. We are, maybe it's just me, are having trouble wrapping our head around this. Now, explain that to a customer, right? Why have things changed? Why am I not getting what I'm seeing on the screen? Well, let me explain. In the interest of making sure that things are more equitable, I can't even imagine how I'm putting that together. These guys are going to have to write that for our CX people. Good luck with that, Walt.
Yeah.
So let's get off that and let's talk about something that a client may want. And we promised not to talk about payment for order flow and increment because those are done. And I guess Doug Sifu he's still out somewhere at 8:30 at a bar talking about it right now probably. But one new idea, and we are going to have Dmitry Galinoff I think later today, the notion of 24 by 7 trading. Blue Ocean's doing it, 24X Exchange will do it, crypto never sleeps. What do you guys think? Do your clients want it?
They do, actually, and we're working toward it. It's actually, if you think about it, if we want to be an international firm, we have aspirations to do that. In the waking hours, the participants don't have instruments to trade other than futures or some other limited instruments. But I think even for U.S. clients, I think 70% of the people do their research or education in off hours. And it's more interesting when you have people who are new to the market, because the concept that they have to wait for some old person to ring a bell at 8:30 and then another one in the afternoon is really foreign to them, especially when it's an electronic marketplace. So I think that they would prefer to be able to transact whenever they want. And if you look at it, and we've done a lot of research on it, if I ask a customer and say, hey, you want to buy stock XYZ at $10. Do you care if that executes in between the bell and the bell, or are you happy that it gets purchased and filled at any time? Of course they're going to say, yeah, just run it. Have it be a seamless order. And so I'm probably being a little aspirational, but I think in 5 years we'll look back and say, why hasn't this always been the case? You know, the markets, because I mean, there's so many other asset classes that do it today.
Yeah.
Why not have the ability to do it whenever you want?
So from your seat, less of a lift, right? Because you're doing crypto.
Yeah.
You can offer the app. That's 24/7 experience anyway. Supporting it, probably
Yeah.
figure that out. But what about the broader industry? What about clearing? What about market data? I mean, what are the?
It's already being done, except for weekends. So 24/5 is already happening. I don't know how many symbols. I think Blue Ocean's got. Well, I know that for some other customers, I think they're up to almost 1,000. But in my mind, what you really need to do is have that market fill out. You know, and when we talk about it, people always immediately go to, oh my God, you're going to have somebody at 3 a.m. in their basement day trading. It's not what you're building it for, right? You're building it for people who, you know, there's a lot of people who work odd hours now in the gig economy, and the notion that they have to sit and figure out when they can trade or invest is kind of foreign to them. So.
And then before we go off the topic, Steve, real quickly, are there other innovations that are on, you know, it sounds like auctions, market data, not on clients' minds. Are there innovations in terms of your equity clients or your options clients where people are saying, look, I need this, why isn't the market able to deliver this to me?
I think the innovations that they're looking for, more of the innovations are actually on the crypto side. And so I think that's where we get, I mean, don't get me wrong, we get a lot of inquiries on many things. We're trying to grow with our clients. You know, obviously Robinhood was very much focused on transactions, and that's how, you know, it was born and built. But now, you know, we're in this phase where we have 23 million new entrants, and we're trying to evolve with them and grow with them. So delivering retirement accounts, securities lending, all the things that, you know, that traditionally that they would look for some additional income.
So it's the expectation of the crypto customer who wants to get into traditional assets and they want more.
You know, here's the way it looks in the world of Robinhood, and I'll be real general. It's, let's call it a third of them are diehard, right? Crypto. And Johan's in here. I think he's on a panel tomorrow. A third of them are curious, and a third of them aren't interested. But having the ability to do both, you know, within that account is something that they all want. As a matter of fact, I spoke about the reoccurring investments a little earlier. The number one reoccurring investment is Bitcoin.
So I'm watching Gallagher Twitch as you say crypto. Make sure you don't have a Kardashian moment up here.
See a Kardashian?
Hashtag ad.
So we're not going to squander some time with Dan without talking a little Washington stuff. So there's an election I guess in 4 weeks. This town's scenery is going to change. Yeah. Any predictions?
Yeah, look, Republicans are going to take the House for sure, and it's just a matter of how many seats. I think they're going to take the Senate too. I think the polls are still royally screwed up and underestimating the discontent with this current administration. So, so for us, right, on the financial services regulatory policy side, huge shift coming here in January when you're going to have Senate banking run by maybe Tim Scott, who is hot to do oversight and to hold regulators accountable. Who's somebody, I mean, we love him at Robinhood because he loves basically our mission, right? He wants to democratize finance. He wants people in these markets, right? And so someone like him running Senate banking, Patrick McHenry, you know, back at the helm in financial services. There's going to be a ton more accountability coming for the SEC, FINRA, other folks. And I think it's needed. I think the last 2 years, it's felt like 09-10 again, right? This irrational regulatory exuberance is nonsense.
So you were there and you saw the effective oversight. So what does that mean practically?
It's a bandwidth tapper. I mean, it is, ask poor Mary Shapiro, right? She was testifying every other week in various committees, right? It's not just in the House, it's not just House Financial Services, it's oversight. You get pulled into ag sometimes if you have CFTC related rulemakings and issues, which you would have on the crypto side. So you're testifying a lot, which drains a lot of chairperson time. You have inquiries coming in, letters, you have IG investigations, you have House oversight investigations, PSI investigations. So it really bogs down the agency.
How about personnel changes, possible, less fun, or is that less likely?
Well, the Republicans, assuming as I do that we take the Senate, would control appointees, right? So like for the SEC right now, it's not a real issue. I don't know who's up next, but they can always hang over for a year and a half. So I don't think there's an immediate personnel issue. I mean, there's rumors about folks who want to move from one post to the other. That would be pretty well bogged down, or at the discretion.
So it slows that down. So freezes things.
Yeah, exactly. So it'll be interesting to see. And I mean, this is again, not a partisan statement, although go Republicans. It's good government. It's just good government to like this what we've been experiencing.
Contention's good.
It's good. Like, and this is what happened. Right? Folks forget 09. 09 was one of the worst years I've ever experienced, personally, professionally. I mean, just this hope and change nonsense, permanent majority. We're gonna right, and it's just when one side gets out of whack like that, it's just good for it to be checked. And I think that's where we sit right now.
So we talked about emoticons and texts from daughters. If we talked about culture also, we live in a world of cancellation and fast judgment. In the regulatory world, that's called merit regulation. And we've seen a lot of finger wagging from the chair on crypto. Don't need to talk about that, but quietly we've also seen things like relaxation of accredited investor rules, just sort of frozen.
Yeah.
We've seen some curious things from FINRA in terms of complex products and derivatives.
Yep.
Are you guys living, or is your firm living, merit regulation? Are you feeling pushes in terms of choices that your clients should make?
I'll go first.
Yeah, go ahead.
I mean, look, our customers want private securities. They want Reg D. They can't get it. They're not millionaires, right? And for us, that pains us, right? And there's no good pooled vehicle to give them the same experience without charging massive fees. So I've always hated the accredited investor standard. I think it's merit regulation at its worst. Clayton, I think, did a great job in loosening. Now, Gary, of course, is, not moving forward with those enhancements, in fact, going the other way. The idea, the nanny statism that prevails right now is thick. Like, we are the government, we're smart. By the way, we're all white males that have $100 million plus. If you look around,
and we
right?
nailed the inflation
we're good.
question.
We're good. Yeah. We're going to tell you what you should be doing. I love that. But the notion that we're just going to pull product back from you because you're too stupid. And this is what I love about Steve's RICs. I mean, the RICs is really at Robinhood a reaction to us being, as Steve said, the stupid narrative that our customers are stupid and need protection from themselves. They actually do quite well, and you can clarify that statement. But so yeah, you look around, you see crypto for sure is subject to full nanny statism. Complex products, options, right? The markets are growing. That's a good thing, right? Giving people, but it comes with it the need for education, depending on what you're doing. But the idea that somebody shouldn't be able to sell a covered call and make a little extra, like that's craziness. But that's where we are. And so I think you saw FINRA came out with their proposal. I don't know if you saw 12 House Financial Services Republicans, the whole panel of Republicans in House Financial Services wrote to FINRA and said, you're basically putting in a new accredited investor standard. Watch yourself, right? Because you're pulling back opportunity.
And the Hill has cared a lot about that.
And they're going to care even more.
Yeah.
So tread lightly on this. And if I was advising FINRA on that one, I'd say, don't try to get to the cool kids table on that. If you think you're carrying the SEC's water, if you think, right, like that's a one-way street, right? I don't see the 2 lanes of love there because, meanwhile, the SEC is going to go write a best X rule because they're completely disregarding FINRA in that regard. So, stay the course, represent member firms, do what's right, but think about investors who need opportunity.
And if you think about it topically, what kind of message are you sending to 23 million new market participants? You don't have enough money, you're too young and stupid to do what other people who are 55 years old and have a bigger account can do.
Yeah.
That's a horrible message. Is that really how you want to welcome people in? That's all we've tried to do in this industry is get more households to participate in the greatest wealth generation machine that exists, right? The U.S. marketplace. And when they come in, we're going to say, You can use a spoon, not a
Right,
fork.
right.
We don't trust you with a fork.
Yeah, it's exclusion.
We don't
Yeah.
want these investors
Right.
in our markets. I mean, I gave these speeches. It was bipartisan. You know, Elise Walter and others gave speeches. Right? You want more people in the markets. How do we get more people in the markets? Well, Robinhood did it. Right? Like, I'm sorry, 23 million. Robinhood did it, and now it's like, whoa, maybe we don't want these folks in, right? Because maybe they'll go on Reddit and you know, do something like they did in January. Well, figure that out.
Yeah,
right?
modernize what you have. Don't
Well,
create
figure
new.
out the
Yeah.
clearance and settlement system.
Damn it, they're supposed to go to the YMCA and join an investment club.
The YMCA. So you must be from Wisconsin.
So we have a final minute, and back to the point about this environment being substantially different than last year. You guys have seen a lot in your careers. Maybe start with Steve. A piece of advice to the operators out there in terms of how you should run your business, and then to Dan, from a policy regulatory perspective, just your best advice in this new nutty environment.
Yeah.
To the room here. Steve, start with you.
I would just say, if you think about what Robinhood is going through, a similar challenge as our customers. So, we just put our head down and build through it and continue to deliver for them. That's what you have to do. And when you see firms that have been successful or market participants who have been successful, they can weather. And that's really what we have to do, just weather it.
And on the policy side, it's funny, it's the lesson we've been teaching for the last 2.5 years to the Robinhood founders. Their whole thing with Washington and it was like, we don't want to be seen as Wall Street. We don't want to have lobbyists and all that whole. They thought that was kind of neat until they got their asses kicked, upside down and sideways.
They're on the menu.
Yeah. So yeah, exactly. You're on the menu. So so engagement, right? It's just it sucks to get on a train to come down from New York and fly, whatever you have to do. But having these policymakers hear from you is hugely helpful.
And it's an amazing story. When you listen to Vlad and Beju, it's an amazing story. And who wouldn't? It resonates.
Well, the policymakers are going to get a good, healthy dose of that and others, thanks to Jimmy and STA. So please join me in thanking these gentlemen for a good discussion.
Well done.
Thanks, Jim.